Hello everyone, my name's Dean, let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 20th, 2022. Yeah, December's almost finished and there's no Bitcoin or crypto pump in sight, except we may very well have that. We may very well have just gotten that, rather, today. Okay? That's what I want to talk about today. Is this bounce? Yesterday we said maybe we get a bounce. Hey, Osman, thank you. Osman says, good to hear from you. Good to hear from you too, brother. So, is this the bounce we've been waiting for? I have strong reason to believe it is, okay? And I'm going to show you that on the charts. I'm going to show you that on the Bitcoin chart. I'm going to show you that on the altcoin charts. I'm also going to show you that on the DXY, the main indicator, which is inversely proportional to Bitcoin and most risk-on assets. If that interests you guys, then definitely stay tuned, all right? Let's get started. Looking at Bitcoin on the 4-hourly time frame, here's what I'm seeing, okay? You'll see a lot of annotations, a lot of lines, a lot of colors. It's not that complicated. Let me break it down for you, okay? Excuse me. If you follow this channel, you know I speak at length about something called reversal, consolidation, A-B basing, consolidation reversal patterns, or A-B basing, okay? It's a concept that's not very well studied in Elliott wave theory, okay? And based off of my own research, I've seen that you need 3 sets of corrections, okay? 3 sets, meaning a correction and a counter correction, so times 3, which basically means 2 degrees of A-B basing and a pivot before you have a completed reversal, okay? A consolidation reversal pattern necessitates on any given time frame 3 sets of corrections, okay? And so those 3 sets that I just spoke of are now sort of designated by these 3 different colors I've put in. I've got yellow for the first set, I've got blue for the second, and I've got purple for the third, okay? So yellow is my first degree of A-B basing, blue is my second degree of A-B basing, and purple is my third degree of A-B basing, okay? Now, is this 100%? No. This is just my read. I'm doing my best, given the price action, to read patterns based off of understandings that we have, with, what constitutes an A wave, what constitutes a counter B wave, okay? So, you'll see that the initial break of structure is a 3-wave move that targets wave 4 of the previous trend. I think we can see that here. Actually, before we do all this, guys, don't forget the context. Don't forget the context, okay? And I think a lot of people have forgotten the context. Some people are super bearish. They're still waiting for the $9,000 or $10,000 Bitcoin or $5,000 Bitcoin or whatever, right? A lot of those people, they don't even know how to put the chart on logarithmic scale. Actually, most people who are looking at Bitcoin to retest a certain support at 10,000 or below, it's because they are looking at the entire chart on an arithmetic scale, on a linear scale, and that linear scale shows a support somewhere here, okay? Something like this. I'm not going to entertain it too much, but it's something like that. Just so you guys know, right? Like, why is everybody talking about 10,000, 9,000, whatever? Like, this is why. Because people don't know what a logarithmic scale is or how to use it, okay? So that is very important. If you guys are serious about doing technical analysis, you should know when and how to use a logarithmic scale and what a logarithmic scale is vis-a-vis or as opposed to an arithmetic or linear scale, okay? Very important. Very important. That's why you've never heard, my entertaining those analyses, because they're just kind of nonsensical. Not that Bitcoin can't go to a certain figure, it's just the analysis does not show that, okay? Anyway, moving on. Give me 1 second. Let me check the comments. Amazing videos of the world says, can you give me away some crypto? No, I don't do crypto giveaways, sorry man. Crypto is giving stress. Yes, it is. So, if crypto is giving you stress, why do you want me to give you some more stress? I'm going to do you a favor and not give away crypto. I know what you mean, but yeah, I don't do giveaways. I just do analysis. Give me 1 second. All right. So remember the large term analysis, right? High time frame. And any good analysis, I believe, starts on high and then filters down below, okay? Excuse me. You go from high to low. And from high to low, you can see that this hasn't changed, okay? The idea that the bear market accumulation, remember, bear market is consisting of both the drawdown, which is the price going down, 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 and the accumulation of that drawdown, or the absorption of all of that supply. A lot of people will have you believe that we've literally been going down and down and down for 600 plus days, right? Again, bad analysis. Any good, honest analysis will have you know we've been in accumulation. We've been in, well, at least sideways, okay? Let's not characterize it. Let's just say any honest analysis will say Bitcoin and most of crypto, okay, has been sideways in channels for the past 200 or so days, okay? This is important because if we're to actually go and change trends and go into a bull market, we first need to do this. And that has been done. And that has not been invalidated. This is very important, okay? The idea that it's even possible that we can start a bull run is only on the table because this exists. Because we have this 180 day channel, right? Something like this, right? 80 plus day channel where Bitcoin's been going up and down and up and down and up and down, absorbing all of this supply. Now, some of you may say, hey, Dean, what do you make of this? Like, that's broken the channel. Well, there's something called wicking below support, and that doesn't violate a channel. There's a point at which if you go down too much, yes, you do violate the channel. What is that? It is the phi ratio, the 1/618 of the A wave, okay? Whatever you count as the A wave, which I believe would be this. If this came down beyond 1/618 of this, then it's a violation. It's a continuation of this drawdown. Right here, okay? But that aside, right, it's still sideways price action. It's still accumulation, consolidation, reversal. We can still count 2 degrees of AB basing and a pivot. Just like we're doing on a smaller time frame here, you can do that on a larger time frame, okay? And that's the idea. That's first, even to entertain the ability or the possibility of us going up from here. Again, this has to be true. So I really want to establish that. And guys, if you guys are, I know not a lot of people do analysis like this. Most people are doing support and resistance analysis. And, you know, I don't know. This is really a derivative, or this is derived from my own research on A/B basing, what Ralph Nelson Elliott called A/B basing, okay? Which is very important. It is a forgotten mode of price action. And in that, I would say that this is an A wave. This has to be the adjoining B wave. Because we came down so far, this has to be this whole thing has to be what was the word? This whole thing has to be a complete B wave. You can't chop it up. And before I was chopping it up, I was saying, oh, this is the B wave, and then this is the A wave, and then this is the subsequent B wave. That can't be, because we've come down too much for this to be a second degree A wave. You guys see that? Does that make sense? I mean, there's like actual method to this. It's not just willy-nilly drawing lines. You have to understand why I would label this as an A and this whole thing as a B, and then a second degree somewhere in here, right? Followed then by a pivot, which may not have played out yet. But yeah, this is the idea, okay? Large time frame, high time frame, it's possible. Just, you know, whatever your AB base count, that we've been in that range for so long, and we can then break up. Now, let's look at this region. This is a very important region. And it has to, for the bull market to even to happen in 2023, okay? Or any time before like the end of 2023, this has to break up. Very simply put. Because if this breaks down and we create a continuation of this trend, you have to repeat the absorption of the supply. Does that make sense? Like, you can't just break down and then break up again. Do you see what I mean? Like, every single time you break down, or you break, you know, after every impulse, drawdown, or uptrend, you have to have either a distribution or accumulation, okay? The Wyckoff people will understand what I'm talking about. You can't just change trends willy-nilly. That's what I'm trying to say, okay? Now let's zoom into that little bit right there. Let's go on the 4-hourly time frame to do that, okay? So this is really where we want to focus our attention today, right here, okay? So I believe that here you can see 2 degrees of AB basing and a pivot once more. At least, if it's not 2 degrees of AB basing and a pivot, it's 3 different sets of a breakup structure and then a counter. Okay, that's really important. So if you don't want to think of it in terms of 2 degrees of AB basing and a pivot, just think 3 sets of breaking the structure and then countering. Every A wave, just like every yin has a yang, every sun has a moon, every positive has a negative, right? Every time you get a break in structure, you need a counter. Every A has a B, okay? Again, this 3-wave move, targeting wave 4 of the previous trend, right? That's what we expect. And this is the B wave, okay? So that's the first degree, okay? Here you see a second degree. It's an A wave, it's an A wave in 5 and a B wave in 3. That's a zigzag, okay? That's a second degree, or what you could call a second degree, okay? I don't know if it's the second degree, but it's a set, okay? This is what I'm reading. And this is another set. You go up in 3 waves, you come down in 3 waves, okay? And that retest, again, it's either a flat correction or a zigzag. If it's a zigzag, like here, you have to respect the 0.618 of this, okay? If it's a flat correction, you have to come down at least to the 0.786 of the A wave, okay? Here, this A wave came all the way up here, and this B wave, 1, 2, 3, came all the way down to the 786 retracement of that. Why 786? Again, because the minimum retracement of a flat correction, we know, based off of our fundamental understanding of Elliott wave theory, corrective waves, corrective patterns, the minimum retracement of a flat correction is the 786 Fibonacci retracement of the A wave, okay? So we have now three sets. That may be it, okay? That's one of the reasons I think that this bounce that we've experienced right here may be the bounce that takes us up and out. Very possible, okay? That's my first read. Secondly, and I've made this claim before, if you just look at this level as designated by this blue rectangle, okay, it is clearly a level that we broke we retested, we pivot, and we go back up again. Do you see that? Again, this was a level of resistance. It was broken, right, by this corrective wave. What we now know to be a corrective wave. It's all kinds of funky. It's a flat correction, okay, and then a counter correction to come back down from it to retest of this, and now this may very well be the breakout of that, okay. So this is my read. Those are the two main reasons why I think that we may have the breakout that we've been looking at, the bounce that we've been looking for. Now, it's not just Bitcoin we can look at, right? The good thing about crypto is we can look at different assets and corroborate our analysis. See, okay, maybe it looks like this in Bitcoin, but it'll look a little different in another asset, okay? And another point of support and resistance, right? Don't forget about this descending triangle. Breakout, retest, and this retest comes at the point of breakout, okay? So that's another way you can kind of say, hey, this is just a retest and a breakout. Breakout, retest, breakout, right? So this is a possible move that we may be seeing in the charts, okay? So let's go on the smaller time frames before we go into other assets. So now we're on the hourly time frame. And what do we have here? Okay? Another reason that this is very promising, okay, is that you've made a higher high, okay? And this is something that I'm going to point out repeatedly on stream today, okay? That fourth wave, remember, an A wave or initial break of structure always targets wave 4 of the previous trend, right? Elliott wave tells us that, okay? This yesterday, this range that we thought was a consolidation reversal range was more likely than not a wave 4, okay, that ended up here, and then you had one last wave down, okay? Now, after that, what do you get? You seem to have gotten a move, impulsive, that broke that wave 4, okay? It didn't target the wave 4, it broke the wave 4. Very, very important point, okay? Usually, when you look for a breakout, okay, you're looking for that break of previous resistance. And the previous resistance was clearly here, right? So wave 4 came down, we consolidated, rejected, okay? Now when that is finished, you now get a completely, it's kind of like what people call a V-shaped recovery, or like you recover this level, you basically show that, okay, this trend is now being established as bullish, and this previous resistance will now be new support, okay? So you come and you break it and you retest it, and then you go on your way. If this indeed is the bounce that we're looking for, this is the kind of move I'm looking for, okay? I'm looking for us to maybe do something like this, right? Whatever we want to do in terms of retesting this level and then continue, okay? Remember that analysis, because we're going to see it throughout, okay? We're going to see it in a slew of assets up and down our watch list, okay? That's very important analysis. If this is the bounce we're looking for, you will have a break of that previous resistance represented by that wave 4 accumulation, or that wave 4 range, whatever you want to call it, okay? Okay, let's actually have a look at our watch list. Okay, so our watch list is green, which is good, okay? That's not bad. But we don't want just any green. We're looking for a change in trend. We're looking for really important structure. So what we're going to do to look at the watch list, we're going to excuse me, zoom out for a second and see on the higher time frames first what things look like, okay? So on the higher time frames, once again, that FTX drawdown resulted in this on November 9th, 8 through 10, right? And you have an accumulation. This is the bottom of that range. You're basically you retested the bottom of your accumulation range, right? Of accumulating what? The supply that was dumped on the market from the FTX debacle. That's it. Okay? If you want to think of it in terms of what happened, what is this? That's all that there is, okay? And then in this accumulation range, obviously, you can do the same thing that we did with Bitcoin. Count 2 degrees of AB basing and a pivot, okay? And so you could do that. You could maybe count this as A wave, or maybe this as a massive A wave. This is a massive B wave, a secondary A wave, a B wave. I don't know. It doesn't really matter. But somewhere in there, if this is indeed a reversal point, somewhere in there is 2 degrees of AB basing and a pivot, right? Or 3 sets of corrections. Now, just like we did with Bitcoin, what you want to do to see if this really is the move to take us out of the bear market, okay, is you want to see a reclamation of this previous resistance, okay? Dodo has yet to do this, okay? We've come down, and this is clearly a 1, 2, 3, 4, 5 situation, and you have a V-shaped recovery here, okay? It looks like a V-shaped recovery. Now, in Dodo, are you going to pull one of these? Another range, right, to then come out? Or is this going to pull up a little more, retest this previous range, right, which represented by the wave 4 of the previous downtrend, and keep going? That's what we want to see if this is indeed the move that takes us out of the bear market for Dodo. Okay, I hope this is clear. This is just basic support and resistance, guys. Look, Ethereum, what did it do? And I think you can see here very clearly, Ethereum is a great example of this, okay? Drawdown. What is this drawdown? Again, this is the drawdown that resulted from the, no, wait. This is not the FTX drawdown. This was the FTX drawdown right here, okay? And this was the resulting range of accumulation of the FTX drawdown. Excuse me. And what you have here is, again, 2 degrees of AB basing. I'm counting it with you right here. I think something like this. Okay, I think that's the pivot. So I would say this is the first degree, this is the second degree, and this is the pivot. And this is your breakout. I think it's clear. It's more clear in Ethereum, okay? And again, you're at the bottom of this range. If you're just trading ranges, you don't know anything about Elliott wave theory, you don't know anything about AB basing, you just trade support and resistance, you make a range. You see that the range was on support right there. That range was on support. You reacted on support. You hit support, you pivoted, you hit support again, you broke out. This is very likely in Ethereum to be the move that takes us up and out, not of this, only of this range, but into the bull market. Another thing is, again, basic support and resistance. If you look at this, what do you see? you see that this pivot represented a previous resistance. What do you see? A breakout? You're probably going to come and retest this as support before continuing. That's it. Okay? So that's what we're looking at. That's what we're being faced with here in a lot of these markets. Moving on. Dogecoin. Okay? So Dogecoin, for me, and again, every market's a little different. There's similarities, but there's also differences, okay? Excuse me. With Dogecoin, what do you see here? You see 1 degree, okay? Sorry, this has to be a 3-wave move. A 2nd degree, okay? And then a 3rd degree, a pivot, right? You see that? 2 degrees of AB basing and a pivot. At the end of the day, this is a reaction once more to the drawdown, the FTX drawdown. You have accumulation of this drawdown right here, and now you're at support of that channel, and you bounced off of support. Okay, very likely this is the bounce. Very likely this is the bounce. If you use your skills in AB basing to count it, it's very likely that this is your pivot. Okay, so now let's just look at that a little more closely. Let's go on the hourly time frame. And if this is your pivot, then what you're looking at is a wave that's likely not finished. It's likely to continue to go up. All right? It's likely to continue and at least break this resistance right there, right? Because again, if you're looking for a change in trend, if you're looking for a bullish reversal, you want to make a higher high of the previous staunch resistance, which in Dogecoin would be at 8 cents, okay? Let's just turn on volume for a second. What you should see is volume spikes when you come to these impulses, if they're indeed impulses, right? And you do see a bit of volume coming in, right? For Bitcoin, here for Dodo, for Ethereum. You want to see volume coming in on, green volume, which is important, okay? Okay. So where were we? We were doing Ethereum. Or no, we were doing Dogecoin, weren't we? Okay. Now Litecoin. Same idea, right? If you zoom out, actually Litecoin here looks like it put in a sort of zigzag. Or was it a zigzag? Let's see. This may be a flat correction. Let's look at it. No, zigzag. Yeah, zigzag, right? This is some form of 5 waves up. This is some form of 3 waves down. You're at the 0618. So you're at mathematical support. Again, you want to look at support. Look for support, okay? And if you're looking for a big bounce and that bounce is confirmed, those bounces likely happen on support. This is exactly where you would expect to find support after a 5-wave move and a subsequent 3-wave correction, okay? So a bounce off of the 0618 or the phi ratio, okay? So that's the first thing that I'm saying is likely sort of, that's the first reason I would see or Litecoin as a potential bounce area, and not just any bounce, but the actual bounce into the bull market. Okay. Now, if we zoom in on the hourly time frame, what do you see? It looks to me like this impulse to the downside ended in an ending diagonal, okay? So, like this, right? Ending diagonal. And then you had your 2 degrees of AB basing, right? Targeting wave 4 of the previous trend. This is your A wave. This is your B wave. This is your secondary A wave, secondary B wave, pivot, right? Your AB basing, your 2 degrees of AB basing and pivot happened all over here. You know, by my read. So you got that. And you got a big bounce in to impulse. Okay, I think this is it. I think this is it. Okay, I think this is it. It looks the part and it acts the part. Okay, and again, just looking at support and resistance, let's say we don't know anything about AB basing. You formed this pattern, you broke out, you're retesting it. Expect continuation. You can sometimes make it that simple, okay? The issue with only being able to do this kind of analysis, support and resistance analysis, which many analysts only know how to do, you know, no slight, you can make a lot of money just doing that analysis, is you have no context. Like, what are you reading? What are you looking at on the higher time frame? Is this in the context of a bear market rally, or is this the start of a boom? You have no context, right? This is why you study Gann, Wyckoff, Elliott, so on and so forth. Okay, moving on. Guys, do you guys see what I'm talking about here? The reclamation of that important wave 4, right? The reclamation of that important wave 4, or that previous resistance. Here, you would just call it a previous important resistance, which would be here, right? This is important. That happened, right? That happened right there. You can see it throughout. That is very bullish, okay? Some altcoins have yet to do that, though. And that shouldn't surprise us, because not everything is as strong, right? There's some leaders and other followers. This Algorand is not a leader. It is more of a follower, okay? So, when I'm looking at algo, zoomed out on the 4-hourly time frame, I've said this before, this is one of those altcoins. It's hard to trade. It's hard to trade if you're trading it on leverage, especially, right? Because it's one of those that forms these slanted consolidation patterns, okay? And these slanted consolidation patterns are they're really tough to read, yeah? But I think the trick is you just have to be super generous with them, okay? So this was the bear market accumulation for Algorand, okay? And then on the FTX debacle, or, you know, when FTX happened, you got this breakdown, okay? Right here. This is a big breakdown. A big breakdown, right? And I'm going to tell you why this is big, okay? And I know this is very particular to Algorand, but why am I talking about this? Because in the scheme of things, it has to do with how not everything's exactly the same, but you find a lot of similarities, right? We go through, you know, our watch list and we say, oh, Bitcoin did this, and, you know, these other altcoins did that. Not everything is doing exactly the same thing. That's why the more markets you trade, the more analysis you have to do. You can't just do one analysis to rule them all. Even though we use Bitcoin as a proxy for the cryptocurrency market at large, you have to be aware that different things are going on. What's going on with Algorand? Well, it's a massive flat correction on the high time frame. Okay, a massive flat correction where I'm not exactly sure the context of this, but it looks as if here you have a three-wave move, and here you have a three-wave move. It's just a pair of flat corrections. Okay, so like an A wave or a B wave. I don't know if it's A or B or X and Y or whatever it is. Do you understand? I don't have the context because the chart is truncated. But all I know is that this is a three-wave move, and then this is the counter to that. Okay? And I know that how to read this counter. When is this counter finished? If it's a flat correction, it's a 3, 3, 5. Okay? So, three waves. 1, 2, 3, 4, 5. Do you guys get it? So all you gotta do to see that this is finished is be able to read this on the high time frame and then this on the low time frame and then count 5 waves there, because every corrective pattern, WXY, WXYXZ, ABCDE triangle ends in an impulse. Okay? So you're looking for the impulse. Oh, and you're not actually counting this trading range, which was an accumulation range for Algorand. You're not counting this the same as you're counting it with Bitcoin or with Ethereum. A lot of analysts get this wrong because, again, they lack context. You go on Twitter, a random analyst will say, oh, these altcoins are getting killed. They're never going to make it. They broke down. They're correct. This is a complete breakdown of this channel. And it's such a breakdown that it's actually hit the target. Okay? Let's look at this. I think this is a really important point. Why you need to do analysis for each and every asset, although you can get an idea, you can get a good sense for what's happening in the market by looking at the market leaders. Okay? This is why we have a watch list. This is why we look at other altcoins. If this weren't true, I would only do Bitcoin analysis like some channels do and only talk about Bitcoin all the time. But actually, if you want a good idea as to what's going on in the crypto market, you not only look at Bitcoin, but you also look laterally at other altcoins, because they're going to be doing something a little different, not exactly completely different, but a little different. Okay? So let's look at this. So right now, I'm saying this was likely a wave 4 correction, okay? And then the FTX debacle precipitated a wave 5. I say precipitated, not caused, because whether you liked it or not, you're getting a wave 5. Do you see how that works? Like, bad traders, bad analysts, they say, oh, it's all Sam Bankman-Fried's fault. That's why I lost my money. No, you lost the money because you weren't able to read the chart properly. And that happens. You can make mistakes. That's fine. That's part of doing business. But that wasn't Sam Bankman-Fried's fault. You just misread something. So what's the target for a breakdown of a channel? It's the height of the channel. Do you see what I just did there? I took the height of the channel, I superimposed from the site of breakout. You're at your target. So if somebody's asking, hey Dean, is algo bottomed? Right? As far as I know, yes. Why? Because on the high time frames, this is likely a wave 4, and the breakdown, the subsequent breakdown, excuse me, of wave 4 yielded a target commensurate with a pattern analysis that we would expect, right? The height of the channel that gives you the end of wave 5, okay? Now, after this, let's go back on the high time frame. After this, what do you expect? Maybe in the scheme of things, this is the end of this accumulation. Maybe in the scheme of things, this is a massive accumulation and then you go into impulse there. That's highly probable. Why? Because we know you have a pattern that's concluded, right? Everything comes in pairs. Just think in pairs. Everything comes in pairs. A wave, B wave. Whatever happens, you're going to have to put in either another pair of corrective waves or go into impulse. Does that make sense? So you're going up more likely than not. That's my read on algo. It's a little different than what we're, our analysis on Bitcoin. And again, it's because that accumulation range, which in Bitcoin, in Ethereum, in Dodo, represented the bear market accumulation of the drawdown, is a little different in Algorand. Okay, so the analysis has to be different. Okay, XRP. Let's go on the 4-hourly time frame. Again, counting from the end of the sort of the FTX debacle, drawdown, accumulation of that drawdown. You draw a simple range. You draw a simple range. The range bottom, range top, right? And you can trade this. It's tradable. These are tradable. Okay? It's not easy because it can always be wicking, right? And there's always some sort of aspect of risk involved, okay? I don't mean to say that this is simple or easy. It's just, it's simple, but it's not easy. That's what I want to say. It's simple, but it's not easy. The analysis is simple. This is a range, and this range created an initial break of structure, a counter, okay? This is the first degree for me in this range. If this is indeed a reversal range, which we believe it to be, okay? And then you got another sort of move up, and then a counter, okay? That's the second. I think that's a zigzag. And then finally, a third move up and a counter, okay? So that may have been it. Or you can look at this as being the second, third, you can look at this as being the second degree, and this as being the zigzag. Or sorry, did I say zigzag? I meant pivot. This is being the pivot. Okay? So, again, in all of this, you can count 2 degrees of AB basing in a pivot, or 3 pairs of corrective waves. The last of which is this pivot right here. Okay? So now let's zoom in. I hope this is making sense, guys. I know this is really wonky, really technical, but that's technical analysis. It could be really wonky, really technical, and still wrong. It's not saying that it's 100% correct, but to give yourself a chance to be able to read the market properly, you need to go through these things, and you need to have a decent command of these tools, right? These observations that we make on the market, and apply them in a sensible, syllogistic way, right? It has to make sense. So here, with XRP, the higher time frame analysis shows us that this represents the bottom of that range that we just showed, okay? And not only does it represent the bottom of a range, but also it represents the pivot, right? It's a viable pivot into what I think is a leading diagonal, okay? I think eventually you get a breakout from here, okay? And what else do I like about this? Basic support and resistance. Price action. You made a higher high. You're retesting it as support. Breakout. Again, keep it stupid simple. Sometimes you need to just look at it simply. Use your Elliott wave analysis. Use your Wyckoff, your Gann, and be able also to look at it quite simply in terms of support and resistance. Straightforward price action analysis. That helps. So I actually entered a high leverage trade this morning when I saw that this higher high was being made. Okay? And I was like, I want to get in, got in, and I'm expecting a breakout. And this is a kind of trade that I'm not going to touch for months. Why? Because this could very well be the start of the bull market. At the very least, it may be the beginning of this move to the top of the range. Right? So at the very least, I'm looking at this move right there. Do you see? But yeah, bear markets, all about accumulating positions. In the bull market, when the bull market actually starts, you don't trade. People have it backwards. If you really want to make life-changing money, the bear market is when you build your positions. The bull market is when you don't trade. Amateurs trade the bull market because it's quote-unquote easy, and they get in and they maybe get little bits of pieces of moves here and there. They make a little bit of money and they're happy. Professionals have put all of their positions in during the bear market. When the bull market comes, they go hibernate. Be a pro, make life-changing money. Build your positions now, not financial advice. Okay. Last but not least on our watch list, RSR. Okay? So I like this read for RSR. Again, start on the high time frame. On the high time frame, excuse me, I'm on support, okay? This is always good. Always get in the habit, if you're really serious about doing technical analysis, get in the habit of zooming out. It will give your analysis context. Whatever you use, if it's Elliott wave or if it's Wyckoff, it doesn't matter. Or if it's just simple support and resistance, get in the habit of going high time frame so you really see what is more likely to happen than not, right? Because the higher time frames are more probably going to play out than the smaller time frames, okay? It's just logic, right? So this support has been held since May. So this represents a 200-day support that this altcoin is on, okay? So it's a really, really, really good idea to get in at this level. Even if you're wrong, probabilistically, statistically, it's smart, okay? That's the first thing you want to know, okay? Go on a high time frame, you see, oh, that represents structural support on the daily time frame, okay? Now you zoom in to the 4-hourly time frame. And here's where you can bring in some of your nuance, your skills in reading markets. So what I feel is going on here is I do read 2 degrees of AB basing. I see this big wick as being our initial break of structure. Somewhere in there, there's a 3-wave move, flat correction, okay? The subsequent B wave is what I'm seeing here as being our counter, okay? Actually, sorry, this I think is the counter to that. All of this, okay? So I would say this is the first degree of AB basing there. The second degree goes here, okay? And this is a stretch, but it's a legal counter, okay? Look at this. Take your Fibonacci retracement tool from the bottom of this purported A wave to the top. And what do you see? You see that this B wave, just barely, but does represent a retracement within the 1/618 or phi ratio of this A wave right here. So this is a legal B wave. This is a legal, it's a stretch. It's very, pronounced. But it is a legal B wave, okay? I did not expect this. I actually lost a position with this move, but got back in. And one of the good things about trading is, guys, even when you take a loss, if you redo your analysis and you get back in at a lower level, you lost, but you also gained. Why? I got in somewhere up here, but then my second position of RSR, I got in down here. So I lost, but I also gained. Do you understand? It's important psychologically and mathematically to understand that so you can keep going. Because the only way to win at this game is to keep going. It's a game of attrition. If you quit, you don't make it. Because the moment we actually pump and we start going for 2 months, 2.5 months straight, and hit 1 million, 2 million, or whatever Bitcoin targets we're going to hit to the upside, if you're not exposed, all of that work, all of that suffering, all of those losses will mean nothing. At least in terms of your accruing, gains in the bull market. You see what I mean? You gotta be invested, but you have to be smart. You can't just be like, oh, I got stopped out, I'm gonna get right back in. No, do your analysis. Okay, so this is my second degree of A/B basing, and I think this is very clearly a pivot. Is it or is it not? Look at it. All right, let's zoom in. Okay, so this is my allegation that this right here in RSR is a clear pivot. And remember, this pivot is also a daily support level, important daily support level. Okay, this is why we do analysis on the high time frame first, so we understand in context of what we're looking at. We're not just looking at something, not understanding what's going on. Okay, so this is my pivot, or at least what I'm reading as a pivot, right? A wave, B wave, pump. This is for me, this, according to my read, this is my breakout for RSR, okay? What I want to do now, bring in my indicators, bring in my volume indicator. Okay, I don't see a big volume move. Maybe it comes in after, okay? And I want to bring in actually, I want to go on the smaller time frame. Okay. So on the smaller time frame, this is telling me, excuse me, it's very likely that this continue and make the higher high. Remember, we need, if this is a bullish breakout, if this is indeed a trend change, I need a higher high. I need to break this resistance to the upside at the very least. Okay? So this is what I'm expecting. If this is what I think it is, I'm waiting for this. Okay? So I added to my RSR position this morning. Upon seeing this, doing the analysis, I'm like, ooh, I'm waiting for this. If I'm wrong, at the very least, it's probable I get up here before getting back out of the trade if I need to. Do you see what I mean? So that's the analysis of Bitcoin and the altcoins. I hope that makes sense. Young Dasa says, what's up? Can you check out Zcash? Yeah, definitely. We'll check out Zcash in a moment. But before we do that, I want to look at the DXY. Guys, the DXY is finally looking like it wants to break down. This is very important because we know nothing happens without the DXY moving. Okay? Not a dump or a pump. So, what we want to see is the DXY fail. Okay? We want to see it fail miserably. So here we go. Looking at the DXY on, let's go on the 4-hourly time frame. What do you see? Same stuff. Nothing's really changed, right? We had this level right here of resistance, and that represents the bottom of our massive head and shoulders. I'm not going to show it. I show it every day. And we bumped our heads up against this, and we broke down. We came back up here, and we broke down again, okay? To me, and I don't know this for sure, but to me, this looks like a leading diagonal. Okay, it's taking its time, but it is actually matriculating down in a diagonal. Do you see? making lower lows and lower highs. This is very important. 1, 2, 3. Wait, let's see. No, I want that. 1, 2, 3, 4, 5. 1, 2, 3. Pivot. 1, 2, 3, 4, 5. 1, 2, 3. I'm expecting to get down here before another move up, right? So if this is wave 1, sorry, that would not be wave 1. This would be wave 1. This would be wave 2. This would be wave 3. This would be wave 4. Actually, do you know what? If this is indeed a leading diagonal, and this is wave 1, wave 2, wave 3, wave 4, then this is going to hell with wave 5. Because what do we know about leading diagonals? Is that wave 5 tends to be extended to a minimum of the 1618 of waves 1 through 3, retracement of wave 4. So I do expect that this right here represents a big breakdown of the DXY down to levels that really excite us, because that should also coincide with a huge pump in Bitcoin, a huge pump in crypto, and a huge pump in the stock market. Let's have a look at the stock market. We don't look at the stock market often because, unlike a lot of other channels, I do not claim that the SPX and Bitcoin are correlated. The only correlation is with the DXY. Both are correlated to DXY, so you may see, it may seem that they're correlated, but they're really not. Okay, what do we have? I haven't seen this for a while. Okay, you know what this is? This is a leading diagonal. What do you see there? Does everybody see that? Excuse me. This is a leading diagonal. Here's the support. Actually, let's just freehand this. Something like this. 5 waves, 3 waves. 5 waves, 3 waves. This is a big breakout. This should also represent a huge breakout in the SPX as a leading diagonal, almost inversely, almost perfectly inverse to what we see in the DXY. Let's look at our indicators. Look at that. Would you look at that? 4-hourly time frame. Double bottomed on the stochastic RSI. Excuse me. I went from coughing to sneezing. I'd rather be sneezing because I was tired of coughing, but my cough's better. Give me 1 second. Okay, so I do foresee, or excuse me, I don't know what it is about the SPX. It just makes me want to sneeze. I do see a huge bounce in the SPX as a result of this count. It looks very much like a leading diagonal, right? Doesn't it? 5, 3, 5, 3, 5. And it's going to probably extend. Let's go on the daily really quickly. It's about to be a really, really green Christmas. Look at the daily. Look at that. Double bottomed on the daily on this stochastic RSI. Like, you can't make this up, guys. If I was into stocks, I would buy today. Like, what a great entry. What a beautiful entry. The 4-hourly stochastic RSI is bottomed. The daily stochastic RSI is bottomed. And again, just really quickly, again, we don't care about stocks because we don't trade stocks, but just to make the point that the DXY is doing what it is, if you take waves 1 through 3, let's see, this is wave end of wave 3, retracement of wave 4, minimum extension 1618, minimum we're coming to 49.25 minimum. You're making that higher high. Again, remember, stocks are in a bear market rally, so it's not really like the most exciting pumps, right? But I guess for traditional markets, this is quite significant. Getting a 28% move. I think that's a big fucking deal in traditional markets. In crypto, that won't really do anything, right? that won't get you out of bed, but you guys know what I'm talking about. Okay, so that's another reason this is likely it, right? Because if you look at the SPX as an indicator of what the DXY is doing, right, or an opposite indicator of what the DXY is doing, it's likely that our read on the DXY was correct. Okay? So let's look at Zcash for Young Dasa, and we can call it a stream. I'm pleased with that analysis. I think we did everything. We talked about everything. Okay, so Zcash. Okay, as always, you start on the higher time frames. Okay, looks like we've done something here. Okay, first thing that jumps out at me, just, out of experience. Actually, let's just look at this. Let's not jump to any conclusions. Okay, all right. Now let's go back down to the daily. Okay, so this on the high time frame looks a lot like what we saw in Algorand. You see a series of it's simply a series of corrective waves. This seems to be like a sort of flat correction. We'll call it A, okay? Again, we don't know the context. It could be X and Y or whatever. It doesn't matter, right? It's just correction and counter correction. That's all we're saying by A. And this is B. It's a flat correction. And this may represent the culmination of a corrective trend leading into impulse. Okay, that's high time frame. Lower time frame, the read again is seeing that this right here, just like in Algorand, this right here represents the impulse of this flat correction. So it's a 3-wave move, right? 1, 2, 3, and every corrective move ends in impulse. So you should be able to count 5 waves down here. Either 5 waves down or a combination thereof. And I'll tell you why I'm saying that in a second. Let me read something. Okay, it's 5 waves down, I think. Okay, I think it's a 1, 2, 3, 4, 5. It's an ugly, nasty, really punishing impulse, but I think it's 4 waves, a 5-wave move. Okay, again, 1, 2, 3. I think 3 ends here, and 4 goes like this: boom, boom, boom. The opposite of a running flat. Or is it a running flat? Yeah, it would. I'm trying to think. Yeah, that's a running flat. That's what you would call a running flat. I'm just not used to seeing it on the way down. I'm always reading running flats on the way up. Okay, so yeah. So basically, what we want to do now is go into smaller time frames. But I hope this helps, guys. I'm not gonna look and read every single last altcoin, right? But you should be able to do the analysis on your own, especially if you keep coming and whatever you learn about Elliott wave, whatever you learn about AB basing, support and resistance, apply it. And that's how you get it. That's how you're going to get an edge in the market, applying this on your own charts, applying this in your own investments. So I would say that this right here is okay, I would say this is not an impulse, and nor is it a leading diagonal. This is a slanted 2 degrees of AB basing and pivot. This is a slanted consolidation reversal channel. Look at this. 3 waves up, targeting wave 4 of the previous trend. Prove it to yourself. 1, 2, 3, 4, 5. Okay? So that targets wave 4 right there. That's your B wave. So that's your first degree. This is your second degree right here. Sorry. This is your second degree. You see that B wave? So this is the A wave, and this is the 1, 2, 3, the B wave flat correction. That's your second degree. And this is your pivot right here. But you're holding this channel right here, which is, it looks like a leading diagonal, but so it's a slow matriculation up. But if you really think about it in terms of the context, right? Again, context helps. And this is why we read higher time frames and we study Elliott wave and all that stuff, because we can gain context. Because without context, you could just say, oh, this must be an impulse. This must be a leading diagonal. Everybody that studies just a little bit of Elliott wave only sees impulses, right? Because that's the part you want. That's what you expect. And so that's what you read. You see what you want to see, right? Everybody wants to either trade the impulse up or down. And so everything becomes an impulse. But in actuality, if you think about it, this drawdown just happened on this time frame, okay? Every single time you have a drawdown or a markup, you need an absorption or distribution, okay? You need an absorption of the supply after a drawdown. You need a distribution of the supply after a markup. This is this consolidation reversal channel consisting of 3 sets of corrective waves, three pairs of corrective waves, or 2 degrees of AB basing and a pivot, is simply the response to this drawdown, which happened on the 8th, which coincided with the FTX debacle, and that gave you this A wave, B wave, A wave, B wave, pivot. You should get a breakout here. That's my read on Zcash. Guys, that's it for me. I hope that was helpful. I hope that was useful. I hope you are involved. I think you're involved because you're watching this, you're listening to this. You know, it's been tough. It's been so tough. But, you know, tough times don't last. Tough people do. You keep showing up. You keep learning. You're going to make outsized returns. You're going to make it for yourself and your family. You'll be fine. Okay? Just because you made mistakes, trust me, I made so many mistakes. It doesn't mean a thing. You know, that's part of it. You know, remember, it's not about the destination. The journey is the destination. Okay? This is not easy money. It's simple, but it's not easy. It can be simple if we let it. So, all that stuff to say, I'm happy. It looks and seems that we finally turned a corner and we can finally begin to enjoy some impulsive price action, right? Some positive price action. Impulsive positive price action, not just any kind of price action, because corrective positive price action doesn't mean shit, because you're just going to correct back down, and if you're lucky, it's a zigzag and it only corrects down to the 618. If you're not, you could create a lower low in a flat correction, right? You can go all the way to the phi ratio of that A wave. So anyway, this is likely it, and I'm excited. I hope you are too, and I hope you're well positioned to take advantage of it. All right, take care. That's it for me.